Insurance intermediaries have come under scrutiny recently due to several significant events, including the COVID pandemic, recent riots, and floods. These events have led many claimants to question the adequacy of the coverage provided by their intermediaries. In some cases, claimants have placed onerous and potentially unfair responsibilities on intermediaries, using them as convenient targets to mitigate unforeseen financial losses. Welcome to another episode of Ensuring Trust with Leppard, a podcast where we share insights and the stories behind the Leppard underwriting team, who are in the business of protecting your reputation. When you take out insurance, you expect to be able to call on your insurance when life happens. But sometimes the cover that you've got may not necessarily be able to cover your need. In this episode, we're speaking about claims and the importance of intermediaries understanding the needs of a potential insured. We've rolled out the heavy hitters for this episode, so speaking to us on this key topic is Executive Head of Claims at Leppard, Fatima Ebrahim, and Leppard Chairman, Stephen Roretz. Welcome to you both.
Thank you.
Thank you. Good morning.
Claims, the whole reason for insurance, right, Fatima?
Yes, exactly.
Steve, Fatima, it's been a while, but I'm glad to see you. I just wanted to know, when did we start calling brokers intermediaries? Did I miss a memo, or is it just contract speech?
I'm not sure. I don't think there was a particular moment.
Yeah.
I would say, though, the difference is that the intermediary out there would generally describe themselves to customers as the insurance broker.
Yes.
Or financial planner or asset manager. But the regulator talks about, as a catch-all, a financial service provider or an intermediary.
Okay.
An intermediary is someone that acts between.
Yes. Yes.
So it makes sense.
All right.
Customers and insurance market players don't refer themselves as, I am your financial service provider, or this is my financial service provider, or my intermediary. I think a lot of these words come out of the legislation. That's where it's come from.
Industry speak, as they say.
Yeah.
Okay. So Leppard's involvement in the financial service provider space has highlighted a critical need for insurance intermediaries to better understand the landscape where their clients operate. Fatima, in your opinion, what are the key areas of focus for insurance intermediaries?
Nzamo, so good to be back.
Yeah.
I think there are various focus areas. However, in my view, the key areas are probably the following. Firstly, I think understanding exposure. In this regard, brokers need to ensure that they assess the risks that they face and the potential liabilities that they may incur. But the onus primarily lies on a broker to be alive to current events and to stay abreast with current trends that could impact their clients.
Yes.
And their own business operations. Secondly, risk management. Risk management. Many claims arise due to brokers not taking risk management and the need for risk management seriously.
Right.
In this regard, I think it's important for intermediaries or brokers to prioritize risk management by developing and implementing comprehensive protocols. This involves identifying potential risks, evaluating their impact, and establishing measures to mitigate these risks effectively. I think thirdly, it's understanding legislation and regulation that governs and impacts them. A broker needs to have an understanding of their legal duties, their obligations, and this in turn will protect them and protect their business. And I think lastly, it's just mitigating risk. By mitigating risk, I mean that as a business, they need to introspect and identify specific risks within their business.
Yes.
And areas for improvement, and furthermore, take proactive steps to mitigate those risks. This might involve updating policies and processes internally, enhancing training programs, or even investing in new technologies to better manage and reduce risks internally.
Okay, I see that. So a significant part of the insurance game is understanding risk and exposure. And that's a constant, right? You're always doing
Absolutely.
that. So why are we seeing an increase in insurance intermediary claims?
So I think that there are a few reasons why we're seeing an increase in claims. Firstly, I think we in a tough economic space at the moment, and that coupled with the fact that individuals are more informed about their rights to claim. But I think it's also the introduction of exposures that have become more complex.
Okay.
What I mean by this is that a broker can be approached by a client who has a very niche business and requires very specific cover. If a broker or an intermediary does not have the requisite experience or understanding, this could potentially be a problem. You could have a broker that deals mainly in the personal line space, and they could be approached by a client who needs marine cover. So this could pose a problem. We're also seeing weather patterns. There's been an increase, as we've seen in recent times, in severe weather patterns and events that may not have been seen to be a risk for brokers in the past,
Yes.
but now are. Then I think the customer expectation. In this regard, I think brokers fail to sometimes manage customer expectations. And if this is not done, it can, eliminate some of the frivolous claims that we see coming through. Then I think we have the compliance requirements and the regulatory change, and brokers not being aware of these changes and not keeping abreast with these changes. And then lastly, and I've left this for last, and that is cyber. Because this is posing a huge problem at the moment.
Yeah.
Businesses have not put in place sufficient measures to protect themselves against cyber risks and have not put in place effective protocols in order to prevent these cyber risks from occurring.
Sure. Cyber, it's like that kid who's always getting in trouble in class. So I just wanted to double click on that. Clients each have unique cyber exposure, whether you've got client information or even there's extortion, they're exposed to ransomware. So relating to cyber, what should brokers be aware of in this regard? I think, Steve, this is a good question for you.
Yeah. So I think when you think about cyber is not a unique risk for brokers. It is a business risk for everyone. And it's clearly, as I said, it's clearly not unique to the insurance industry.
Yes.
It happens across all businesses. There are specialist covers for cyber risks, and brokers need to pay attention to those specialist covers. And they do what they do.
Yes.
And they're quite good policies. It is my view that these policies are very stringent, and they expect the insured to have serious risk management protocols before offering the cover.
Yeah.
And that's quite a key element. You're telling the insurer that you do certain things in a certain way. And when that goes wrong, the insurer will consider the policy in the light of what has gone wrong. And if you are in breach of your own protocols and what you say you're going to do, the policy may not respond.
Okay.
That's quite tough. And I think the broker needs to be very clear to customers about the scope of the cover. I think pure insurance is an inadequate solution. If you're really hit hard by a cyber attack, insurance may respond with a few rands, but it doesn't help your business survive. So the broker and their client, the broker for themselves and their own business and the client's business, would be far better served by well-considered risk identification and mitigation, and establishing really strict internal procedures about how people operate in their digital environment, and educate every single employee constantly.
Yes.
Reminding about what's happening and making sure the latest patches are up to date. It's a serious issue.
Yeah.
Insurance helps, as I said, with some reimbursement, but will likely not help the survival of the business and its reputation if something serious happens. That's my view around cyber.
I'm wondering how you watched the incident a few weeks or months ago that unfolded, where there was a software company that was involved in
CrowdStrike.
in CrowdStrike, in air traffic control, in hospitals, and you're thinking, I wonder if they've got their ducks in order. I wonder what you were thinking as you saw that unfold.
For me,
Yeah.
concentration risk.
Yeah.
How on earth could we get to a point where one single business, let's call it that, I mean, it's massive, has so many fingers and so many pies.
Yeah.
They obviously do quite a good job.
Yes.
One hit and many businesses were affected, and substantially affected. The legalese is going to roll out for years as people take action against CrowdStrike. But I don't know what those terms of trade were.
Yeah.
There could have been significant limitations and liabilities.
So, Fatima, it does appear that claims in this space are an issue. What are some of the types of claims that you are seeing particularly?
How long do we have?
Steve has to go soon.
There are various types of claims that we're seeing. If I could pinpoint the areas from which claims are presenting most frequently, it would probably be the following. Firstly, I think it's the failure to advise their clients on specific policy conditions and or warranties in the policy. It is incumbent on a broker to advise their client should there be changes to a policy or specific warranties contained in that policy, to inform them and advise them of these. Then I think it's just failure to carry out clients' instructions. Claims arise here where brokers just forget to carry out instructions or as a result of a basic administrative error. And I just want to pause there and add that we're finding many claims arising from this. However, it's an easy fix to mitigate. So if brokers have proper protocols and proper processes in place, I think this can be easily eliminated.
That's good news.
It is. It's positive. Then I think there is the problem of employee fraud, and it maybe talks to the economic space that we find ourselves in. And this is resulting from an employee of an insured stealing brokers' money or even third parties' money. This probably, again, can be addressed by way of having good internal processes and protocols in place. Then there is the impersonation and cyber fraud, which we can, again, talk for days about. And I mean, there has been so much of education and training in this space, but these claims are still coming through. We're still seeing quite an influx of claims in this space. And it's important that, you know, brokers introspect and educate their staff internally regarding this particular risk and try and mitigate these risks from presenting.
This is an unscripted question, but it came about when you mentioned something regarding the weather. So you look at countries like, for instance, Japan, who live in the ring of fire. Earthquakes are common. As we experience more and more weather phenomena in our context, how people are covered change, and how should brokers respond to the changing instances on the ground?
So I think brokers need to be, you know, these are not new phenomena. I think they've always been there, and I think we've just tried to park it. I think as a broker, you need to be alive to these trends and constantly, you know, find ways to provide solutions for the customer by taking into account these probabilities that may occur.
A broker has quite an onerous position here. They are not necessarily experts in everything, but they need to be fairly masterful in a lot of things. And then there is the necessary broad attention to information out there. When you talk about weather patterns and things, that's not in the control of a broker. It's not in the control of the customer. But a single event
could be catastrophic
across the board to many people. Now, I think it's incredibly unfair to say that the broker is responsible for all of those things. It's a systemic event. It's almost, act of God, force majeure, and that you need to start contracting out of liability, and we need to talk about those issues as well.
Okay.
Or limiting liability.
Or limiting
for that.
liability.
Yes. For that.
Okay. Which we'll get to. So let's start it back a bit. Recently, I heard a broker say that the purpose of an intermediary was to look out for the customer to ensure said client gets the right cover on the right terms that is suitable for their needs. Steve, can you explain exactly what are the duties of a broker?
Yeah, well, I'll go through it in point form, but before I say anything, the broker's duty is not to guarantee cover for the losses that his customers may face.
Okay.
They're not a guarantee.
Yeah.
They don't have a blank, this is old language, a blank signed bank guaranteed check. I don't think a lot of people understand what that means anymore. So implied duties in point form, I mean, the duty of a broker is to identify and advise the customer about the type of and scope of cover which the client needs, and in doing so to match fairly precisely the possible exposures which have been identified with the client's business.
Right.
I reference back, the broker is not an expert in the insured's, his customer's business. The customer needs to be recognized. They're the expert in their own business, and they need to communicate to the broker about their concerns. And a lot of that sometimes that fails. Having identified what cover the client needs, it is the broker's duty to arrange the cover. And there sometimes things go a little bit awry, and Fatima's already mentioned, administratively, things don't happen properly. If the cover is needed by the client, if it's not available, there must be a communication. The broker must take great care, to ensure that the precise nature of what is and what is not covered is made entirely clear to the client.
They need to educate their clients on that.
That issue of what is not covered also links to what the broker services are about. And you mustn't overpromise what you're going to do. In fact, more particularly, I would say you need to confirm what you are not going to do. The next point really is the duty of the broker on the renewal of a policy, an existing policy. There must be a process and an ability to communicate to the customer saying, your insurance policy is coming up for renewal. I need to deal with it. And are there any changes? What differences have to be made? And that needs to continuously be monitored and matched to the customer needs. And then I suppose finally would be the reminding the customer, the client, to disclose all material circumstances. That also links back to the disclosure requirements by the customer as the expert in his own business. What changes have happened? What I need to communicate to my broker saying, this is the shape of my business and this is what's happened over the last year,
right,
or whatever the period may be. The express duties, this is now from a legal point of view, these would be set out in the broker mandate, and I hope there is a contract. Unfortunately, that's not always the case these days at the moment. There's legislation and regulation that dictate what must happen and phase everybody knows about. And from my point of view, we encourage all intermediaries to have a written agreement. And this is now a recurring theme. It started from the very first comments that Fatima said. It's how we need to move into the modern world and structure proper agreements with customers, service agreements, explaining what you're doing and what responsibilities both parties have, insured and the broker. Finally, preventing, and this is your weather pattern is a great example, preventing yourself and business being exposed to things that are completely outside your control. A pandemic comes along, weather in KZN. It's so large, it affects so many people all at the same time, completely out of your control. You can't take responsibility for that. And then finally, provide the level of security and protection when things go wrong.
Yeah. And which in business they invariably do. Earlier, we touched on the importance of risk management, and I'd like to circle back to that. Considering that a large part of an intermediary's role is about understanding client exposure, Fatima, can you explain on Why is risk management so pivotal from a broker's point of view?
So Steve and I have debated this for a long time, and we keep coming back to the fact that risk management remains key.
Okay.
Effective risk management is not reactive. And I'll say that again. It's not reactive. It's proactive. An experienced broker or a good broker will anticipate potential risks before they escalate into costly liabilities. They will help clients stay ahead of the curve and minimize exposures to unforeseen challenges.
Right.
So risk management is crucial in ensuring a smooth and effective business operation, which will ultimately be of benefit to them as a business, but to their client as well. I think risk management is just a basic tool. It's a tool that brokers and all businesses, for that matter, must implement effectively to ensure the longevity of a business and to maintain their clients' trust. Essentially, it is the client who is the lifeblood of a business, and it's important that we keep that at the forefront. But I think the most important reason for risk management is that it will give a broker the competitive edge in the market, and it will set them apart from the rest. So I think that having a good risk management protocol or risk management guide is going to be the essential differentiator. By prioritizing risk management, brokers will ordinarily, and this is in summary, ordinarily will protect their clients' interest, ensure that appropriate coverage is in place, and mitigate potential losses that may occur. So yeah, risk management is key.
So the landscape in which brokers operate has its fair share of complexity, and complexity increases on a continuous basis. Steve, you're big on highlighting the need for intermediaries to enter into sound written agreements with their clients to mitigate their liability. As a long-standing figure in the insurance industry, you've seen enough horror stories. Why is it important for a broker to limit their liability?
I think from an overarching point of view, I want to see a situation where brokers now move into a proper modern contracts with service contracts,
yes,
service agreements with customers. That has not been the case generally. The larger brokers most certainly do on the big contracts, big corporate customers. So a lot of it has happened, but it's just not a discipline. You enter into a contract with an accountant doing your tax. There's a 4 or 5 page document and there's a limitation of liability. You enter into a design contract with a consulting engineer. There are limitations of liability. They can't take responsibility for everything.
Right.
And I think the broker, as an overarching comment, needs to get to that point. And it's limiting your liability as between you and your customer, and also limiting your liability as far as possible between you and the insurer, where the insurer provides you an outsource agreement to do certain things. There's an unfair balance there, and there are reasons why those things exist, I understand, but there's an unfair balance. There's power on the part of the insurer, and the insurance broker doesn't have the same power. A broker cannot guarantee that every eventuality will be covered. I referenced this already. They're not in a place where they just have it's an open check. You just can't do it. You kill your business if you do that. Ensure you're not responsible for things that you are not accepting responsibility for. That sounds a bit odd, but I can't accept responsibility for things that I'm not going to be doing. And it's probably the other side of the coin of the guarantee. And at a certain level, you simply cannot buy enough PI cover. A smallish practice potentially has very customers with some serious exposures, and that could run into hundreds of millions. You buy cover for hundreds of millions, you won't be able to afford it unless you're massive, global. It's a completely different situation. So it's it's also linked, I suppose, to making sure, and Fatima said it earlier, to making sure that your business does the stuff that you are good at and able to do. Don't overpromise what you can do.
Which speaks to also an ethical matter as well.
Oh, there's a big subject now, ethics.
So even as you were talking earlier, like your accountant, I'm like, do I have a written contract with But you're making me think. I was just remembering the last few weeks we've been doing some things that have had a written agreement component, and just making sure that you're crossing your T's and dotting your I's.
Yeah. We have that all the time. My own accountant.
Yes.
I won't say their name, but I've signed a document that limits liability. You go into a hospital, you sign a liability waiver.
Right.
You drive into a garage, you may not notice a sign, and there could be a challenge, but that limitations liability. Right. Why on earth are you saying, I have got unlimited liability to you, Mr. Customer, no matter what happens, and everything is covered? It's just nuts.
It's crazy.
But I think also in limiting liability, it's important for a broker or any professional for that matter, that is including a limitation, to make that limitation known to the customer.
Yes.
It must be brought to their attention. It's not necessarily okay to just have it hidden away somewhere in small font at the bottom of the contract. I think it's important that they go through the contract and they make that known to the client, so that there is an understanding and a meeting of minds in that regard right from inception.
Yeah. And it's not something that's difficult. I think the customer, remember, they probably have contracts where they limit liability to their customers.
Right.
So the conversation must be an open conversation. I need to limit liability. I cannot be everything to you.
Yes.
And the customer cannot expect everything from you as the broker. And once you get over that hurdle, the conversation, I think, becomes easier.
I'd imagine there's an element of reciprocation where if a broker is able to tell you, I can't cover X, Y, Z, then the client goes, perhaps I need to augment how I do things in certain areas because I may be exposing myself to risk that I can't cash in on.
Absolutely.
Yeah.
Absolutely.
So I'd like to go off-road for a bit. In an online article from a few years ago, Steve, you spoke about this very topic. A reader, and I'm assuming a broker, had some pushback in the comments of that article where you were quoted in, and he said, I sincerely hope that Leppard and the like stop their nonsense by underwriting the profession rather than each individual brokerage. They also, expletive, us by increasing the rates every year, once again citing bad loss ratios for the profession. And then there is a double increase via increased turnover. They do not treat individual brokerages fairly in terms of TCF?
Treating customers fairly.
Treating customers fairly, that's correct. So, to my surprise, you responded. You were there in the comments. I was like, okay, all right, Steve, could you please read what you said in that comment?
Okay, this is well over a week ago, so I have to read it. I don't remember what I said. Hi, to the person, obviously. Very important point made by you about underwriting individual brokerage exposure. That is exactly what Leppard do. Like every market, we have a base rate model, and that's empirically based. Then we overlay the individual brokerage risk profile. I am very happy to be criticized and learn from any positive contribution. Why don't you get hold of me directly and tell me how you are different? Or better still, assuming you are in Johannesburg, let's meet face to face. Finally, when it comes to TCF, and especially when it comes to claims, I am not able to talk about other markets, but this is an absolute non-negotiable part of the Leppard culture. Now, I'm touching on a number of issues there.
First of all, your willingness to have coffee with the guys.
I'm very, very, very happy to have a cup of coffee with them. I love coffee.
Yeah.
And I probably love this person as well.
Yeah.
The issue here is when you look at a particular risk, there are nuances in that risk. Yes, insurance broking business in the short-term industry is a relatively homogeneous risk.
Right.
But every single one is something different. There is a difference between someone that has one massive, large corporate customer versus somebody that has 300 personal lines customers. There's a difference between someone that specializes in professional indemnity as a broker and someone who specializes in marine, and people that have a broad swathe of business called commercial. Now, we take those things into account, but the foundation is still how much premium is required, less cost to cover the claims that come out of that whole population. But we do look at each of those, each individual within the population, and try to look at those differences. And if you can explain your differences, why you're so much better than the other, it makes a difference. It does make a difference, especially when it comes to claims. And that's a reference culture.
Yes.
That is what we say. We want to protect your reputation. I am determined as a business to protect the broker profession.
Right.
That's why I talk about limitation liability, not taking on responsibility for yours. And it's their business.
Yes.
It comes down to succession planning, training internally, risk management, everything we're talking about already this morning.
I think we're ready for that audiobook with Steve doing the reading of that audiobook. I think we're ready for it. Fatima, I need a tasty claim before we go. But before that, can you share what are the most common types of claims your team encounters?
Okay, so I'm going to cite one of the interesting claims that we've had. There was a fire that gutted a property that was occupied by a tenant. The fire caused substantial damage to the property as well as the assets contained in the premises at the time. Investigations revealed that the property contained acetone, a product which is classified as highly flammable, and the storage of such product would have been material to the risk. Now, in this instance, the broker failed to inform the insurer of the storage of this highly flammable product.
Oh, no.
And the broker failed to disclose this material fact at renewal. At the time of the fire, the risk address, through investigations, it revealed that it also contained more than 100 kilograms of flammable liquid gas, the storage of which, together with the acetone, created a massive problem and probably resulted in the fire.
I'm starting to think, how legal is this operation?
When the claim was submitted to the insurer, the claim was rejected, and it was rejected on the basis that the policy warranties had been breached, apart from the fact that this material information about what was actually stored on the premises was not actually disclosed. It was also found through investigations that the premises was not fitted with an automatic sprinkler and fire detection system, which would have been necessary had they been advised of what was situated on the premises. So the claim was essentially rejected by the insurer, and the claim was then brought against the broker for failing to properly insure the property and failing to obtain proper and complete details from the client at the inception of the policy. And I've cited this case here because I think it's important for us to look at the case in relation to the duties of the broker in relation to this particular circumstance. And it goes into what is the broker's duty in an instance like this. I think there is an overarching duty of acting with due care and skill and diligence. And, that's at the forefront. But it's also important, referencing this particular claim, to make the necessary inquiries so to acquaint themselves as to what exactly is the business of their client, what is at the premises, procuring all that information from the client during those renewal discussions. It is important, to elicit material facts and information which could affect or adversely affect the risk. Now, and I think Steve touched on this, there is the client's duties and the insured's duties.
Yes.
And it is the client who knows and understands their business or understands their risk address, whatever the case may be. But I think that simultaneously there is a duty on a broker to procure all the facts because the client may not necessarily know what is material and what isn't. I think very importantly as well is to advise the client of the material conditions and provisions in the policy.
Yes.
And in this instance, had the insured procured all the information, the necessary cover would have been obtained, and the client would have been aware of all the conditions and the warranties that the policy required.
And then would have had the opportunity to respond to, these are the things we can't cover, and you have an option to actually do something about it.
Correct.
Yeah.
Exactly that. So whilst this was an interesting case, I think there was a lot of learnings that
Yes.
came from it, and very important takeaways for brokers.
Steve, you look like you had something to add.
Just I'm thinking out loud. Thinking out loud. I mean, this particular case also, I think, highlights that complexity of a business and a broker wanting to arrange insurance or provide a service. And I'm not casting aspersions, but you wonder sometimes how much a customer is going to hide as information. And it does happen, unfortunately.
Yeah.
And the broker gets caught out. That is a big issue. I mean, that risk must remain wholly and completely with the customer.
Without a doubt, brokers play an integral part in helping clients get the cover and solutions they need across a variety of industries. We hope that this conversation has been helpful in better equipping intermediaries as that vital connection between clients and insurance companies. Make sure to listen to previous and upcoming episodes of Insuring Trust with Leppard on Spotify, Apple Podcasts, and YouTube. Follow Leppard on X, Facebook, and LinkedIn at Leppard & Associates. To find out more about Leppard products or to get support as a broker, visit leppard.co.za. Till we meet again, make sure your reputation is protected.